Hi there, it's John Lane from TaxSaleList.com. If you don't know anything about TaxSaleList.com, we're the company that's been around since 2002, providing over 10,000 tax sale lists per year to investors who get involved in the tax sale business. Anyway, today we want to talk about tax liens and tax deeds and what's the difference and how do they work out from your standpoint. We have two basic types of tax sales in the United States. We have tax lien sales in about 28 states and tax deed sales in the rest. Now, how do they differ? They're really quite a bit different. A tax lien sale, what you're doing is you're paying someone's taxes for them. Now, you don't deliberately go to that individual and say, "Hey, I'm going to pay your taxes for you." What happens is they haven't paid their taxes, and the taxing jurisdiction, which is usually the county, sells a lien on the property. When you buy that lien, you're in effect paying their taxes for them. Now, the property owner who didn't pay his taxes is given a period of time. It's known as a redemption period to pay the county back and pay off that lien. So you don't deal with the property owner. You deal with the county, and the county deals with the property owner. But what happens is they're given this period of time to pay it off, and they get really, really high interest rates on these. I mean, if you look at today's economy where you're lucky to make 1% in your savings account, I think the least you make on any tax lien basically is around 10%, and there's some states where you can make as much as 30%. The beauty of the tax lien is you're dealing with the county, you're not dealing with the property owner. And if they don't pay you back, if the property owner doesn't pay off the tax lien, you get the property, and you get the property free and clear of any mortgage or other encumbrances. That's really a super deal. Now, that's not going to happen very often. But when you don't get the property, you're going to make somewhere between 10 and 30% on your money. It's a win-win situation. Now, the majority of the time, the tax lien is going to pay off fairly quickly. The redemption periods vary depending on the state from 6 months to as much in one state as 4 years. But the reality is most tax liens, the majority of them, pay off in less than a year. Now, 90% of the time, like I said, you're going to make high interest on your money. 10% of the time, and it's going to vary by the type of property, you're going to actually get the property if you buy a tax lien. If you get the property, it's an absolute home run because you get it free and clear. No mortgages. There are some very, very few exceptions. In a number of states, they have what they call special assessment liens. These tend to be extremely small. And in a number of states, special assessment liens might not be wiped out. But in the vast majority of them, everything's wiped out. And you own the property free and clear. Now, how big is this market? There are over 3 million tax liens sold each year. And over 1 million of those are sold online. And the beauty of it is today with the internet, the majority of the work you need to do, you can do from home. When I got started in the business, you had to run around the country, you had to go into courthouses, you had to pull property cards, you had all that kind of stuff. Today, you don't have to do that. You can do almost all of your work from home. Now, let's talk about tax deed sales. In a tax deed sale, it's a real estate auction. It's a regular real estate auction. The property's sold to the highest bidder. Now, most properties are going to sell between 70 and 100% of market value. And the majority of the properties on a tax deed sale, which are much smaller than tax lien sales, the majority of the properties are going to be vacant land. This is the only type of tax sale you can participate in if you have to get a piece of real estate. This is the only one where you know that if you win, you're going to get a property. Because in a tax lien sale, if you buy the lien, you don't know if it's going to redeem or not. Because of the way tax deed sales work, due diligence, doing your homework, is extremely important. It's more important than a tax lien sale because, frankly, in a tax lien sale, 90% of the time the lien's going to redeem. So even if you didn't do your due diligence right, which we're not suggesting you shouldn't, but even if you didn't, you got a 9 out of 10 times chance that it's going to redeem anyway. In some tax deed sales, interior inspections are available. If they are available, you have to do them. And it's absolutely critical. You have to know the value of the property in a tax deed sale. Because if you win it, you own it. And if you paid too much for that property, you're going to have a loss. Which of the two is best? A tax lien sale or a tax deed sale? It really depends on what you're looking for. Are you looking to absolutely get a property, or are you looking for a return on your investment? If you're looking for a return on your investment, it's tax liens. They're going to provide a much higher return on your investment than a tax deed sale. But you're never going to know for sure if you're going to get a property if you buy at a tax lien sale. A tax deed sale, if you absolutely want to end up with a property, you go to a tax deed sale. But you're going to pay more for that property. On a tax lien sale, when you end up with a property, you've probably paid 5 to 10% of market value. On a tax deed sale, if you end up with that property, you will have paid 70 to 100% of market value. If you'd like to learn more, we regularly hold a free 1-hour webinar that'll answer your questions about tax sales. To register, just go to the link www.taxsalelist.com/free/290 or click the link below in the description. Have a great day. This is John Lane for TaxSaleList.com, signing out.